Just got done editing this interview. You guys are going to love it. Before I do that, though, I want you to know that I'm going to be in the comments for the next 30 minutes or so answering your questions. If there's additional questions you want me to ask the CEO next time I interview them, leave them below. Or if you're just loving the data points I get CEOs to share, click the thumbs up button below. That's your way of telling me you're loving this stuff, and I'll get you more of it. Additionally, again, I'll be in the comments answering any questions you have. All right, for 30 minutes. Enjoy the interview. Hello, everyone. My guest today is Luther Birdzell. He is building a company called OAG Analytics. He's an entrepreneur, data scientist, and engineer passionate about energy efficiency and democratizing AI. From boardrooms to oil fields to data centers, Luther has been transforming data from a cost to an asset for over 20 years. In 2013, he founded the company to build a cloud platform that makes AI easy and scalable for the oil and gas industry. Luther, you ready to take us to the top?
Yeah, how are you, Nathan?
I am well. Okay, so everyone says they're an AI company. Everyone says, that's great. Everyone says they're an AI company, but the question is, are you actually kind of an AI company? Explain to us what the technology does.
So, Nathan, I founded this business in 2013 with an initial vision to democratize AI and machine learning for upstream oil and gas, specifically helping with planning functions. This year, we pivoted from self-service tools to create AI and using machine learning to a much sharper focus on solutions built with machine learning and AI. Specifically, we're helping U.S. independent operators, primarily in the Permian, but we are working virtually every major basin in North America, and we're helping them improve the predictability of tightly spaced unconventional oil and gas wells.
Okay.
We also have subsurface capabilities, which we're working with a bunch of companies on, and those are very complementary as it relates to planning functions. Our companies does still sell the software to also manage the data science workflow, but that is no longer our primary offering.
Okay, so just to be clear though, so would you say you're more of a consulting company today, or do you still have a strong SaaS revenue stream, recurring revenue stream?
This is even more. This helped us get even stronger with our focus on the SaaS revenue stream.
Okay, so just to be clear, over the past 12 months, if you take the total pie of your total revenue, what percent would you say is pure kind of SaaS revenue versus consulting you're doing?
So we're about 60-40 SaaS to consulting today. The goal now over the next 12 months is to refine that to over 80% SaaS, less than 20% consulting.
Okay, and when are you engaging with these folks? Is this when people are still speculating on how much oil is under the ground there, or is it after they've drilled the first hole, they've already found it, and they're trying to optimize basically what they extract?
So our technology, Nathan, is additive in both contexts. So both on the A&D side, searching for the next asset, as well as then planning whether it's the first well or the 1,000th well, how do we get the best economics, not only out of that individual well, but out of the drilling unit holistically in which those wells are drilled.
Okay, and give me some context here. So I know nothing about oil and drilling. I imagine a lot of my audience probably doesn't, unless they're from Houston or Dallas or Austin, one of these places. What are people paying for this, right? So if they want to use your technology for a year and all the drilling they're doing, what are they going to pay you on average?
So we have a consulting rate that's fixed fee, very straightforward, $2,000 day rate.
Okay.
We invest with customers in our pilots. So a typical 8-week pilot, we're only charging $50K for.
Okay.
And to be very clear, the team that's required to execute those, we are very much investing with the customers to prove the technology in among their teams. Our annual subscriptions then start at about $225,000 $225,000 annually, and range between $225,000 and about $750,000, depending on the scope of the engagement.
Okay. Would you say that the kind of sweet spot average for you per engagement is closer to the, call it, $300,000 a year mark, or more like $700,000 a year?
It's closer to the $300,000 for the current market, Nathan.
Yeah. Now, are you generally, I like to kind of see patterns over time. Are you generally moving up market or trying to open your top of funnel, move down market more, get more customers?
So it's actually both.
Come on, Luther, you can't do both.
Well, we're trying, Nathan. We are focused on increasing market share among the 20 largest U.S. independent oil companies. Those are the companies that have done enough drilling to have sufficient data to take best advantage of this technology today. They also have enough activity to be able to test and prove the technology operationally, right? The only thing we can prove in a pilot is that we can improve predictability in the historical program. Got to deploy quite a bit of capital. Median well cost today is about $8.4 million per well.
Okay.
You've actually got to drill wells and use the inputs to actually prove it in the field. The bigger companies are better positioned to do that today. Historically,
that's 8.4 million average, like before any dollars of revenue are generated.
Correct.
Well,
and that's just drilling and completion costs, Nathan. The cost to acquire the land to actually drill those wells in, or to lease the land that those wells are drilled in, can be hundreds of millions to billions of dollars before before the first, call it $8.5 million well goes.
So a $300,000 contract with you is a rounding error for these folks in the grand scheme of their P&L.
Well, Nathan, I was brand new to the industry 6 years ago, and that was my impression too. Most of the oil companies, of these bigger companies especially, they'll have operating budgets of over $1 billion a year. Most of them, they'll think about software, even software that directly contributes to, enhances the way that $1 billion is deployed.
Mm-hmm.
They categorize as G&A. And everybody's super sensitive to G&A, in most just about any well-run business, but especially kind of where we are with oil prices,
where
they're not really high, they're not really low, they're kind of right in the middle. Every penny counts.
Yep. Okay, this makes good sense. Now, you founded the company in 2013. How many customers are you working with now today?
So we have worked with over 30 companies through our history, and we are actively engaged with about 5 companies right now, with a bunch of very exciting conversations going on with some others.
How do you plan, right? So if you take 5 active customers at your $300,000 a year price point, or about $20,000 a month, that puts you right now at about $100,000 a month just on the active SaaS stream of things. You do consulting on top of that. Are those numbers basically accurate?
Yeah, it's ballpark.
Okay. If you go back a year from today, where were you on just the pure play SaaS side? Were you still at about $100,000 a month, or have you grown nicely?
So we were smaller. We have had growth through this year. But Nathan, one of the things that we found coming into Q1 of this year, we had a few companies that were doing great with our software and a few new companies that we just signed up. And those new ones that we signed up earlier this year, that they were smaller. Couple aspects of them, they didn't move forward. It just wasn't the right fit, which not only prompted us to reconsider our sales strategy, shift the focus to the sales strategy, Nathan, in terms of the size companies we were working with and the specific geographies and basins we were working with, but also to rethink this business model and really catalyze that pivot, again, from where we started as self-service software to use machine learning to build AI, to a company that's really selling solutions. So off-the-shelf software to improve the predictability of the tightly spaced wells.
So Luther, is all this code for you've kind of pivoted a bunch over the past year, and you're basically flat year over year?
So we did pivot.
It's okay, by the way. There's nothing wrong with being flat.
I'm just being honest, giving you the best numbers I have, Nathan. So we did pivot. We did not have the growth that we expected. As a result of that, regardless, we are still up, and we've got about 6 weeks of selling left to do before Christmas.
Now, is this usually a good 6 weeks for you? Do you see seasonality towards the end of the year, or no?
It is. Upstream oil and gas tends to purchase software in Q4, in Q1, little bit in Q2, and very little in Q3.
Okay, got it. So you kind of just are getting through kind of the typical weak period in your industry, and you should see some strength over the next 6 months.
Yeah, and we used Q3. We did several marketing events, several conferences to help inform the kind of latter half of this pivot, which helped us really bring it home. And the customer resonance, the market resonance around these more specific solutions off the shelf has been very well received so far. So
what do you think this year ends? You can call it in 3 months or so, right? So what do you think you'll finish this year at total revenue, all your revenue streams combined?
Nathan, we're chasing 5 deals really hard, and we get 0 of those. It's a very different year than if we get all 5.
If you get 0, we break $1 million this year without any of those 5?
Yeah, we had 100% renewals this year. So we were over $1 million just on renewals that we carried in.
Yep.
Plus, we've signed up some additional customers. So we are growing this year.
What does that mean, though, when you say 100% renewal? So you said you have 5 active customers, right? So how many of those were already with you last year that you renewed? 2 or 3?
Exactly.
Okay, got it. And then you added 2 or 3 others at 300 to 500,000 ish, annual contract deals.
Yep. Yeah,
I see.
That's ballpark.
Okay. Now, have you done this, Luther, all bootstrapped, or have you raised capital?
We have raised some capital. The Rice Investment Group, who was our largest investor coming into 2019, led our Series A with a $3.5 million financing that we closed at the end of March.
Okay.
That was the primary primary funds that we used to support our pivot.
So total funding to date is what, 3.5 million?
Nope. Total funding to date is a little over 6.
Okay, a little over 6. And when you're going out kind of getting the valuation on this thing, do they look you like an agency, like in consulting business, or were you able to get kind of the SaaS valuation multiples, 5, 6, 7x on top line?
SaaS multiples, and we are very much a SaaS business. We've used consulting to learn from the market and to position and develop our products. But this business was created as a SaaS business, and that is the model we're executing.
What's your team size today? How many folks?
Total team is about 32 all in.
That's a lot of people, Luther.
It very much is, and it's a lot of different skill sets to bring this whole solution together.
How many of them are engineers?
So of our 20 full-time employees, 18 of us are scientists and engineers.
Okay, actually writing code.
Writing code, doing data science. I do count myself in there. I'm not writing as much code, Nathan.
Would your developers call you a developer? Do you get that street cred, or do they joke with you and say, Luther, come on, you can talk our language, but you're not a real developer?
No, it's the latter. We talk we're very open about founder code versus real like engineering code. I'm a great prototyper. To complement that, I have hired tremendous product engineers, some of whom I've worked with as much as 17 years, since we were in our early 20s.
Okay, so call it 18 of you guys are in the kind of that space. Do you have any quota-carrying sales reps?
We do.
Okay, how many? 1 or 2?
We have one. He joined us in September and is off to a great start.
How do you think about, you raise capital, you're going to get asked questions in those VC meetings, like, how much do you pay to get a new customer and things like this. But you because your contract values are so big, it's not like you have hundreds of customers of cohort data you can look at, right? So to get a new $300,000 per year account, do you know what your cost is on that? Will you spend $300,000 to get a $300,000 a year account?
No. Our cost of sale isn't anywhere near that high, Nathan. And one of the things that we further refined through our pivot was very efficiently getting either a yes or a no in less than 90 days, and on an increasing basis. We're getting more yeses and nos in as little as 30 days, which is huge progress for us toward the predictable revenue, which then we know how to scale.
So when you add in the commission to that sales rep, plus conference spend, plus any Facebook ads, anything like that you do, what would you say your fully weighted cost is for a $300,000 a year contract?
Our total cost of sales and marketing combined is less than 20% of that revenue.
Got it. So that'd be about $70,000 on a $300,000 a year kind of contract.
Even a little less than that.
Okay, fair enough. And most of that is going, again, to that sales, the commission, the travel, any ads, conferences, things like that.
Yep. So by far our highest costs are payroll. Yep. So the scientists, engineers, data scientists, geologists, geophysicists, petroleum engineers, petrophysicists, mathematicians, and software engineers, that's the majority of the costs.
Yep.
In addition to that, commissions, travel, and whatnot, net out somewhere it's less than $50K per customer. is our current rate and forecast going forward.
That's great. Now you raised capital, so I assume you're now burning capital to drive growth. Otherwise, you wouldn't have taken the dilution to raise capital in the first place, right? So what kind of burn monthly are you comfortable with sleeping at night? Are you comfortable burning 200 grand a month or $1 million a month, or what's the number?
I have never had the opportunity. I'd be very uncomfortable if we were burning $1 million a month. That would be a very short runway.
Yeah.
I'm really more focused on runway relative to timing of getting this business on to kind of hockey stick revenue growth ramp.
So what is that for you? I mean, are you maximizing for 6 months of runway in the bank, 12, 18 months?
So with 12, I don't lose a night of sleep. I haven't had 18 yet, Nathan. We're well over 6 months right now. For me, I'm sleeping fine, but we are going to be raising more capital in 2020.
And how much do you think you'll raise when you go on 2020?
So our 2.5 million, which will complete a $6 million Series A that we bifurcated. We did the 3.5 with Rice earlier this year. We're going to complete the other half of that, roughly other half of that, in the first half of 2020.
Why is Rice okay with that? They gave you money earlier and you're going to let another 2.5 million come on the same term sheet, but the risk is lower because you've been in business for 12 months longer. How do you get Rice comfortable with letting you roll the term sheet?
Good question. We're actually discussing that in our board meeting on Thursday. Conceptually, we're going to be going back out to the market, Nathan. This is Series A2.
Yep.
Not necessarily going to be on the same terms that
got it.
The first tranche.
Fair enough. Now, if you're managing for what you quote well north of 6 months of runway in the bank, if you just raised 3.5 million, call it a couple months ago, divided by 12 months of runway, that puts you at like $250,000 in burn. If you were actually at exactly 12 months of runway, is it accurate? Are you burning about $200,000 a month right now as you drive growth?
It's varied a little bit. This is my first startup.
Mm-hmm.
We've grown the team in some areas this year. I've also working with the management team. We've cut over $500,000 of G&A.
Okay.
So this is just getting better.
But why is that? I mean, are you trying to get like under a certain amount of net burn per month?
We are maximizing for customer delight, which is a direct proxy in my experience for shareholder value creation.
Mm-hmm. Luther, you're very well trained in this. When push comes to shove, though, you're an entrepreneur. You've got payroll. You have to balance this stuff. You're raising capital. Like, this is the game we all play. It's not an easy game, but we also get the upside if it works well. So I guess we'll just kind of leave the burn question at that, right? Which is you like to be between 6 and 12 months. You're not losing sleep right now. You feel good.
Yep, the business is properly capitalized and it's funding accelerated innovation.
What do you feel like you will grow, total revenue growth year over year? What do you feel like you'll grow at as you close out this year from 2018?
So 2018 was 3x growth over 2017.
Yep.
We went to market in 2017. 2019, again, depending upon how this year finishes, is going to be anywhere from some growth to potentially quite a bit.
What's some, though? Are we talking like 2x, 1x, 150%?
In that ballpark. It'll be less than 2x. If things go great this year, we may hit somewhere in the neighborhood of 2x.
Okay.
But again, the pivot was really optimizing for future revenue.
What will you definitely be above? I mean, if you close no extra deals the rest of this year, I mean, will you be above 50% year over year growth? So that'd be going from like $1 million last year to 1.5 million this year.
Yeah, right. Yeah. So something right in that ballpark, Nathan.
Fair enough. All right, Luther, let's wrap up here with the famous 5. Number 1, what's your favorite business book?
I'm sorry, it's
or if you don't have one, you don't have to answer. You can just say I don't, you're not reading one right now.
Getting to Yes.
Okay, good. Number 2, is there a CEO you're following or studying?
I have a few mentors who've been CEOs of multiple businesses.
Pick one.
Including Gordon Brooks. Gordon Brooks is my CEO mentor.
Very good. Number 3, what's your favorite online tool for building your company?
Google.
Okay, good answer. Number 4, how many hours of sleep you eat every night?
7.
Okay, and what's your situation? Married, single, kiddos?
Married. Dog is 1. Kids are a couple years out.
All right. So we'll call it a half kid there. And how old are you, Luther?
42.
42. Last question. What do you wish your 20-year-old self knew?
Oh God, so many things. I don't even know where to begin. I regret letting people talk me out of starting my first business. So wish the 20-year-old self knew to just go for it and ignore the naysayers sooner.
Guys, OAG Analytics, AI for oil and gas. They've got about 5 customers paying anywhere between $300,000 up to $700,000 per year. Also have 40% of their company is consulting, 60% SaaS, but moving towards more pure play SaaS and just consulting in a support role. Founded the company in 2013, raised about $3.5 million to date. Looking to close out actually an additional capital on top of that, getting up to about $6 million raised. Team of 20 full-time today, 32 full-time plus contract labor, 18 data scientists and engineers, 1 full-time sales rep, 100% renewals year over year. So healthy economics in the base. The question now is, can they add more than 5 customers as they look to scale year over year, growing 50%, north of 50% year over year right now. Luther, thanks for taking us to the top.
Brilliant summary, Nathan. Thanks so much.
These CEOs rarely give these kinds of interviews. I hit them hard, I get the data, and I want to do it more. So if you want to get more of this stuff, make sure you subscribe up here. And then additionally, go check out one of my other CEO interviews right now.